Hello traders, it's Chris from the TraderGuide.com taking a look at the February 21st trading session. I've got an interesting pair here. This is Kiwi Swiss. This is one a lot of traders forget about. And really it's at their own peril because when you think about it, what are the aspects of this? Well, the Kiwi dollar tends to be very sensitive to commodities and therefore risk. And of course the Swiss currency is a safety currency. So this shows what global risk appetite is like. And you can see we've been going higher since really the beginning of April of last year. So on the chart, I have a 50-day, 100-day, 200-day exponential moving average. Longer-term traders love these averages. You can see it has held up. There's been some pretty wicked pullbacks, but in general, we've gone higher. So what I'm going to do is I'm going to go ahead and zoom in, ignore the moving averages at this point. I do on these levels. That's the 1 hour, the 4 hour, and the daily. So as I zoom in on the daily, I'm looking for a very quick move. I'm not looking for a massive move at this point. I first think that we will find a bit of support at 71.80. I think that a position at 72.10, long of course, and aiming for 72.50 is a very reasonable trade. I don't see any reason why we can't pick off 40 pips here with the trend. This is not a huge move waiting to happen. Another thing that you could do is possibly take half at this level, move stops to break even, and then maybe aim for 73, get a little bit more value out of this play. I do think that eventually the buyers get involved. What I do find interesting though, let's take a look at the alternate scenario. You can see that the 100-day exponential moving average has offered pretty significant support a couple times. So even if we pull back from here, that might just give us an opportunity to buy on value. No interest in shorting this market, obviously. The trend would work against that. Pay attention to stock markets. A tertiary indicator could be how they behave in the morning or later in the day, depending on where you're at. They do look healthy. Even the CFD markets for the closed U.S. indices indicate that the buyers are out there. So I like this move. To use a baseball analogy, it's not a home run, it's probably a single, but really nice little trade here in what could be a fairly choppy and quiet week.